My guest today is Shah, known online as the micro startup guy. He's quietly doing something most people don't think is even possible, buying and growing online businesses for under 25,000. In total, he's acquired 6 businesses, some for as little as 2K or 4K, and he's now building what he calls a micro HoldCo, where the goal isn't to swing big, but to play dozens of small, high leverage hands is exceptionally well. Thanks a lot for coming to the podcast, Dev.
No, thanks a lot for inviting me, Mick. I've been a big fan of the podcast for a while, and yeah, there's not a lot of podcasts in this niche, so it's really interesting what you're doing.
Thanks. So let's start at the beginning. Before you were the micro startup guy, what were you doing? What experience or early interest pulled you into this world of entrepreneurship through micro acquisitions?
Oh, dude. So I mean, from my side, I've always known I wanted to do my own thing. I've always been obsessed with businesses. So I the first business I started was straight out of high school. I started like a college consulting company. So I ran that for 2 years, but I very quickly realized it was just like a glorified agency. And I didn't realize how much I would dislike the agency business model. So after that, I was a bit disillusioned because I was like, okay, I made good money, but I didn't like the business. And my entire life, I thought like business is what I wanted to do, and that's what would make me happy. So that was a bit weird. But then at that time, I had some money, and I was like, okay, what do I do with this? I can put into the stock market, I can put into crypto, but neither of those seemed very appealing. So that's when I came across acquire.com, and it was very quickly like love at first sight. I couldn't believe that nobody else had told me you could buy a business for like as little as a profitable business for as little as like $5,000. It just blew my mind, and like literally from that day I was all in. I was like, this is what I want to do. This It just felt like I couldn't believe that everybody didn't know that you can buy a profitable business for $5,000. Like, why is that not a common fact? Like, everybody knows you can go out and raise $10 million or whatever. But like, I don't know. I just feel like more people should know that. So yeah, that's kind of how we got started. And it started off as like I started off just going through business on acquire.com. I was like an anonymous meme account on Twitter posting like different businesses that I saw and memes about buying businesses. And yeah, yeah, that's kind of where it started. And slowly it snowballed into like making multiple acquisitions and now into what Pocket Fund is right now.
Okay, before getting into this, discussing all of those acquisitions and your strategy, if you can share your holding company today, what is the size, the employee count, and what is your role when doing all this? And what are the maybe pros and cons of businesses at this size?
For sure, for sure. So, to be honest, in terms of pros and cons, it really does depend on the type of business. So, we're generally focused on SaaS newsletters and mobile apps. So, like these are the most of the types of businesses that we bought. So far, we've actually bought 7 businesses, which are with our seventh one closing like 2 or 3 weeks ago. Out of these 7 businesses, 2 of them were newsletters, 3 of them were SaaS businesses, and the other 2 were like one was like an AI business on WhatsApp, and the other was like this TikTok page that we acquired. So generally, I'd say it's hard for me to know exactly like how to value it. But definitely our most successful acquisition was Sourcely.ai. We acquired the business for $4,000, and we exited that business like 4 months ago for low 6 figures. And that's definitely the main one. That's the main exit. Besides that, we've had another small exit where we bought a business for $1,000. We sold it in 3 months for $5,000. And the other businesses that we currently run, altogether, they make anywhere from $2,000 to $3,000 a month up to like $10,000 a month. It does depend a lot on like getting the right sponsorships for newsletters, and how much effort we can actually put in, because with a lot of my team. So I think you mentioned the team as well. So currently the way Pocket Fund is set up is we have three teams, marketing, development, and analysts, right? So marketing and development is where most of like the businesses are being run. So they focus on the operations, they focus on actually maintaining the businesses and growing them, and analysts are finding new deals for us. So we actually get like a lot of deal flow right now, mainly off market deals. So we get anywhere from like 30 to 50 deals every single week. And these can be businesses that are making 500 MRR all the way up to like 50,000 MRR. So there's like a couple different things that we're doing right now. Since we sold Sourcely 4 months ago, we've been shifting. We've been less focused on acquiring our own business and more on like kind of like buy side consulting, advising, and especially helping people with deal flow, because we've realized that that's like kind of our special sauce right now. But yeah, that I don't know if there's something that I might have missed in the question that you asked, but yeah, that's kind of what the setup of what Pocket Fund looks like right now. And I honestly, so we're fully based in India. We just started working in office in Bombay like about 2 months ago. Before that, the entire team was fully remote, and I was in college. So yeah, I think like I genuinely think there's a competitive advantage to being in India, because I don't think the economics for these like $5,000 deals really make sense or work, for having like not just for a founder in the US, but especially for having employees or people working on the businesses in the US, because I just see like the difference in motivation and the difference that what you can do, the dollar goes a lot further over here, and I generally do think that like being from India is a competitive advantage for these micro deals that we're doing.
Hey guys, quick break to tell you about today's sponsor, ScalePath. If you're a HoldCo or small business owner, you already know the truth. Growth comes with a lot of trial and error. ScalePath is here to help you skip some of the errors. They run tight-knit peer groups made up of 7 operators with similar business models and revenue. You meet once a month on Zoom to workshop your toughest challenges, share lessons learned, and hear about opportunities others are spotting in their industries. Whether you're in home services, B2B manufacturing, professional services, or running a holding company, there's likely a group for you. Beyond the monthly calls, members can access to expert-led sessions, a private forum, exclusive content like the members on the podcast, and even discounts to top-tier events. You can apply at joinscalepath.com, and I recommend scheduling a call with the founder, Rand Larson, to see if you're a good fit. Again, joinscalepath.com and schedule a call with the founder, Rand Larson. Now, back to the episode. Are you planning to keep it like this? Or as you already see, lots of deal flow you mentioned from $500 ARR to 50K ARR. Do you already look for larger acquisitions as well? And while running it with a team in India, it could already, like buying one company like this could make all the difference. You don't need to do all this work with those micro companies, if you know what I mean.
Dude, 100%. So honestly, the way I see it right now, the beauty is not as much in doing like, yes, like turning a $5,000 acquisition into a 40x return is amazing, but it's going to be very difficult to replicate that, right? And especially scale it. Where I see the potential is in actually making 10 to or maybe even 100 $5,000 acquisitions, right? And doing it and having like a model that will enable us to, because the investment wouldn't even be that much, but it would, like, we would obviously need to build up to that, but we need to have the right systems, the right setup such that we can actually find. So I think right now a really good model that we're testing right now is we buy the business and then we put an operator in place. So until a couple of months ago, like until 6 months ago, I was always like the main, like not, I wouldn't say the main operator, but at least like making most strategic decisions, and I would have like different people from different parts of the team working on, whatever element of the business was required. But now I think like the beauty is in much more copying what private equity does, is which you buy a business, you put in an operator, right? And their pay is directly linked to the revenue of the business. The incentives are directly linked to the revenue of the business. And the talent that we're seeing we can capture here in India, and especially for the prices, I just, that's where I see the potential and the scalability, So I think you kind of ask like, what's next, what are we really trying to build here? I would say that's what we're trying to build here, but I'm not entirely sure what the exact numbers would be, right? Are we going to try to do 50 deals, 100 deals? Would that be at $5,000, $10,000, $20,000? Would that be a range? I think like we're still figuring out that, and we're trying to figure out the model of, okay, how do we now scale this? How do we take, like, reduce my involvement entirely, get operators in? Yeah.
And how do you find those operators? And do you buy the business first and then you go and look for an operator, or you find an exceptional talent and then you see skill set, experience, all that, and then you go and find the deal? How does it work?
Yeah, so I think that's something I've been asking. I change my mind on every month. I feel it's a bit of like a chicken and egg problem, I think it is a mix of both, because the way I see it is that, like, yes, you may find the perfect operator, but then finding the ideal business for them, especially with the terms that we want. So we also generally try to buy businesses for 1x annual revenue or lower. So we try to keep our payback period below 12 months. And we also aim for an exit in 6 to 18 months. So it's a very different model where I know a lot of the larger players, they're looking for more like 3 to 5 year timelines, but I think with what we do, we can have those shorter timelines, so we're able to like sort of give a very definitive plan to a potential operator, right? Once we have a deal in mind. But yeah, I think so right now what we've done is we found the deal first, because I think like finding the right deal after finding the right operator might actually be harder, because I think the deal, if there's a lot of value in the deal, then we can find the right operator. And in terms of the operator, that's actually kind of, I wouldn't say easy for us, but it's a lot more straightforward. So basically, like any hiring post that we put on LinkedIn goes viral. Like once a month, we put out some kind of hiring post on my LinkedIn, and like I only have like 4,000 followers or connections or whatever, but every single post gets anywhere from 20 to 50,000 impressions, and we usually get like 50 to 200 applications. So we have a really good hiring pipelines. We also have my communities. So I have a Discord community, WhatsApp community. Both of them have a couple thousand people. And my audience on Instagram, which is around 60,000 people. So I really think like social media has been a massive leverage point for us to actually hire these people quickly, even find deals quickly. Because without that, it's very difficult to actually like, try to find the right people, and what's good is that so right now we're actually closing an acquisition. So this is literally like a test of a model, right? Like this is our first test. And so we found a really great investor, who we think will be able to help a lot with the business operationally as well. And we found a business for him to acquire. He's acquiring 100% of the business, and we're putting in place an operator that we've sourced. And we actually put out applications on my LinkedIn, and the operator that we found is like this 17-year-old high school kid who lives in a town like a couple of hours away from Bombay, Pune. And he's like, he's not super crack, he's not super experienced, but he has the right mindset. And honestly, these businesses are not that difficult to run. Like they're often like if it's making $50 a month, $500 a month, being able to double or triple it, especially if the previous founder was putting in no effort. From what we've seen, it's not rocket science. It does require a certain level of mindset, like motivation, and of course, like actually having the right people to help. But I do think we kind of have the right setup here. So yeah, that's kind of how we're operating right now. But I think all of our processes are a work in progress. We're learning a lot, and we're trying to iterate on a weekly basis. To improve them.
When it comes to the portfolio, do you have like any synergies between those businesses, or you don't rely on this?
Those started acquiring companies. They were all in like the student AI tool space. So Sourcely.ai, which was my first acquisition that I bought for $4,000, it's basically like an AI powered Google Scholar. So after that, we acquired another SaaS that was a student AI tool. We acquired a TikTok page that was a student AI tool, a newsletter for student AI tools, and all of that combined, like the monetization was very similar, because we were able to monetize the SaaS with the communities or the audience, So I think we see a lot of value in like combining different sort of assets that can like together add a lot of value. So that's kind of how we approached, especially like that kind of roll up way. After that, so once we had that set up really well, we really like newsletters, and then we started acquiring different newsletters. So even our most recent deal it's a newsletter that we acquired, which has 50,000 subscribers, and yeah, I just find newsletter business is very interesting. And again, like across newsletters, a lot of the operational work is the exact same. You're writing an edition every week, you're reaching out to a bunch of sponsors, you have a pitch deck for them, you have certain pain points of theirs, you have to do a couple of sales calls, and yeah, and then you get affiliate links, stuff like that, and of course growth. So I think like newsletters especially have been a business that we've seen like where the operationals are like weirdly similar. It's like the exact same thing, just on like a different community, or a different like target market.
Hey guys, quick pause to give a shout out to our sponsor, Spacebar Studios. If you're in the trenches of growing a B2B company, especially one backed by private equity, you've probably faced the challenge of generating demand without overloading your team. That's where Spacebar Studios becomes a game changer. They plug in as an on-demand growth engine for companies doing 1 to 50 million in revenue, taking full ownership of go-to-market execution. Think of messaging, outbound, paid media, and more. And their focus? Driving revenue, not vanity metrics. They've partnered with both VC and PE-backed firms across SaaS, compliance, and enterprise services, and consistently delivered pipeline that converts. If you want real growth without growing your headcount, check them out at spacebarstudios.co. That's spacebarstudios.co. All right, back to the episode. If you had to define your edge when doing all this, what would it be?
So do you mean like Pocket Fund's edge or like my edge?
I'm just trying to understand, like one thing we covered is you living in India, like the cost of labor, abundant software talent. Then you have this media distribution. Is there anything else?
Yeah, so I definitely think like our deal sourcing is our special sauce, because all of the businesses that we bought have been for like every acquisition that we made, I can almost confidently say that we could have turned around and sold it for double immediately on the open market, right? But it's just because we source them off market, right? And we're decent at negotiations and understanding the seller's point of view, how to make the deal seem, I mean, it is good for them usually if they're not talking to anybody else. But yeah, like everything that we bought has been for less than 1x revenue, or less than 1x annual recurring revenue. Every SaaS business, every newsletter that we bought has been less than 50 cents per subscriber. So we tend to buy them on that cheap, and And that obviously still comes with some problems, right? So I think that's another thing where we're not afraid to take over something that has problems, because we know what we do good operationally, right? So as long as we know what we do good, we know what we can fix in the business. So having that confidence, and then also like, yeah, just being able to execute on it, like you mentioned, like coming from India, just having that competitive advantage of having access to great labor, like great talent at really good prices, and then that matches with these micro acquisitions, because the economics wouldn't make sense otherwise. So I think that that's a huge added bonus. And like you said, like I think the software costs are really what I see, like some of the clients, some of the investors that we work with, that we help with deal sourcing, are like from a very finance background, and also like the other, just the rates that we see internationally people pay for developers, like we're paying a fraction of that, and that makes a huge difference when you're buying something with 1,000 MRR, because you're no longer like that usually limits like at least 50% of the buyers for these things, right? Where if they're not technical, they can't buy it. And even if they are technical, they think their time is worth more. For us, one developer work on multiple things, you know, it's it just, the economics make a lot more sense, and I feel like it, I don't know if that's like I don't know if that's a competitive advantage, because like anybody could hire from India, but I do think it does give us a leg up, especially with these micro acquisitions, you know.
Okay, deal sourcing. You wrote the post. My morning routine in looking at acquire.com for 30 minutes, and from there you buy businesses. Can you discuss this post? It's quite a long one, but I think we can go through this, and you can share your secret sauce.
100%. So first of all, I love Acquire. Like it's just, I just think it's like one of the best platforms ever. Like just the fact that it makes like a random kid like me from India like buy a US SaaS, a profitable US based SaaS business for just like $4,000 is absolutely wild to me. And like I know there are other marketplaces like Flippa, Biz Buy Sell, other marketplaces, but for me, Acquire is the best. It has the highest quality, and especially for these lower deals, and the team genuinely cares. So I think like I try to spend at least 30 minutes to like an hour now is tougher for me, but at least 30 minutes every day on Acquire, just looking at businesses, interacting with sellers. It's where I started, and it's where I learned the most, and still do to this day, I think the post was a lot, so specifically about the post, it was a lot about how my deal sourcing process works, and also like tips for first time buyers, or just because generally it is like there are literally hundreds, if not thousands, of these businesses on these marketplaces, so finding that like, that specific business that's ideal to you. I do think that there's a lot of businesses on these marketplaces that in the right hands can immediately 10x, within just a couple of weeks and months. But it's really hard to find these businesses, So generally what I covered in there is like you need to be checking marketplaces at least thrice a week. Acquire has like, I don't know, like couple 100,000 registered buyers. And from what I've seen, all of the best deals get taken within 2 to 4 weeks. So if you check, like most people that I speak to that are dabbling in this, check them once a month, and that's not good enough. You need to be checking them multiple times a week, even if it's just even if it's just like not for very long, right? 10 minutes, but you need to check, right? You need to have specific filters that you're looking for. I think this is really important. A lot of people try to like go out there and see what's interesting and then try to figure out what they want to find. But I don't think that's the best approach, because you're never going to find a good deal if you don't know what a good deal looks like to you. So define those initial criteria, whatever that is. Even if you don't know exactly what you're looking for, like just put some initial criteria, so that like I think of it as like there's this whole big wide like unknown world, you need to give yourself some honing beacons, to initially start looking at those businesses and build your intuition for understanding how to evaluate them. So for the first one, definitely like check marketplaces often. Next is like just use filters, make sure like once you have your criteria, use these filters to differentiate between different revenues, startup age, number of customers, and try to go as minute as you can, because like I really think that like I genuinely think that analyzing listings and looking at businesses for sale is like a muscle. And it's like, in a way, it's like, sometimes like you work out and it's and you have a really hard workout and there's just like some muscles that you don't even realize that you had, until you actually work them out. And I think this is like one of those, where you don't initially like, no matter what job you do or what you do, you're gonna have some opinion on when you look at businesses for sale, right? And that's going to build up into an intuition that's specifically for certain niches or certain strengths that you have. And that's where I really feel is the magic. It's not to go out and find the best business that everybody is looking for. It's to find the best business for yourself. So building that, like, going through listings as an intuition, as a muscle, going through listings quickly, making sure that there's no, like, you can identify red flags quickly, identify the main metrics that you prefer quickly. And I generally think, like, look, when you start out, it'll take you 10 minutes to go through a listing, maybe 15 minutes, Now it literally takes me like 2 minutes to go through a listing, sometimes even less than that, because I know exactly what I'm looking for and I know exactly what's a red flag for me. I know exactly what would make when a founder is making the business seem a lot better than it might be, when a founder might be covering things, covering problems. Um, so yeah, I think that's I I don't want to talk too much about this because I know I can go off on a tangent sometimes, but yeah, I generally think like I think there's a lot that people can do to find the right deal. I think a lot of people quit too early or they just make the mistake of looking very passively, or just trying to find the deal that everybody's looking for. But I don't think that's what you should be doing, right? Especially if you're looking for a business under $100,000, stuff like that. If you're a search fund, you want to take an SBA loan, that's a different thing. I don't think my advice would apply as much over there.
And has it for you? How has it changed? Like good deal now versus good deal when you first started? Because I can see you buy all things, everything. You have SaaS companies, newsletters, mobile apps, TikTok pages. What are you looking at? And you covered some of the things, like some of the red flags you see immediately after, as you've been doing that for such a long time. So how has those things changed for you? And what is a good deal for you now compared to before?
100%. That's a great question, honestly. And like I think, like when I first started, I honestly had no idea. I when I first came across acquire.com, I spent 6 months, and before I found Sourcely, I probably met with like over 500 sellers. So for some context, I had also just broken my ankle, so I was bedridden for like 2 of those 6 months. But I was literally just meeting hundreds of sellers, just understanding what's out there, what kinds of deals are there, how they run their businesses, how they value them. So I think like I got a very good sense of this space of deals under $100,000. And like especially the differences between SaaS versus newsletter versus mobile app. But what I've seen is that very often, and I mean, this is not like a groundbreaking insight, but very often, like the businesses, if you take away the specific tasks, the higher levels are the same, right? There's operations, financials, and like tech, right? These are the main things that you have to look at for any business, and generally like monetization probably. So across these four, I think like first of all with like financials, it's usually about a checklist. Does it have a certain amount of profit? Does it have a certain amount of revenue? stuff like that. Even with monetization, it's usually a checklist, so we have the basic criteria, we're usually looking for at least 50% profit margins, at least at least generally $50 a month in revenue. Um, and I think that even in terms of website traffic, how they're actually getting customers, it is important for us that they're doing something, there's something that some kind of traction or some kind of interest that they're getting, right? Whether that's with SEO or that's with going viral, having a couple of posts going viral, stuff like that. So that's a bit harder to define, but it is a bit of a checklist, where it's traction. Then I think what we really are looking for is once they meet these checklist things, it's we're looking at the operations, First of all, is this something that we think we can do extremely well? Is this something that whatever is required in the operations, in the marketing, does it align with what we've already done well, right? Because we've grown multiple businesses now, mainly SaaS businesses from a couple hundred MRR to all the way up to 7,000 MRR, and that's been with SEO, with influencer marketing, with us getting millions of views on our own brand channel. So we've tried most things, especially on the B2C side. So that's kind of what we look for. We look for things that we know that we can execute really well on. So I think that there's no it is a bit we don't. I've seen a lot of the funds as well that we work with, or other people that we work with. They have a grading scale, they have a scoring scale, and they also have I often feel yes, that is a good way to especially compare businesses, and especially when you're getting so much deal flow, and you have so what I've seen with a lot of these funds is that they also have a one analyst is to 100 deals, or 200 deals. And I think that's a format that is very difficult to evaluate businesses or compare them in any other way besides having a check, a scoreboard, But I really feel that we're really looking for something where it's underpriced, undervalued, fits our checklist, and we see operational operational improvements or a value add, the value creation that we can do should be really straightforward to us, and it should be mainly on the operational side of things. We don't want to just increase prices, because that's what I see a lot of these larger acquirers do, where where they were oh, one of our biggest value creation levers is pricing. And I get how that makes a lot of sense for these guys, but I don't know how that can how you can say that as one of your biggest value creation levers with a straight face. I mean and I also don't know as much as them. I've not as experienced with larger SaaS businesses, but I really think that we're really looking for something that we really think we can add a lot of value to very quickly. And I think that's kind of how we define a really good deal right now.
What is something a lot of people may be doing something similar, wanting to do something similar? What do you think do they overlook when doing all this, when it comes to those micro acquisitions?
Yeah, that's a great question. So I definitely think there's first of all, there's different buckets of who's trying to do this, right? First of all, it depends a lot on how much time you have. If you're a professional, if you're somebody who is looking to do this as a side hustle, I think that you need to first of all allocate time accordingly, and think of this in a way that this is something that you're gonna have to give in time eventually, and it will compound. I think that a lot of people really what they really misunderstand is that they think that it's just gonna be kind of they just have to get lucky. It's kind of just gonna hit them, the right deal is just gonna come, that they're just gonna be in the right place at the right time. And I think what I would say is there's this concept called the surface area for luck, which is something I read in Sahil Bloom's newsletter, which I it's similar to how I think about a deal surface area. So if you're just putting, like, if the only way you can find deals is with the 30 minutes or 1 hour that you spend on marketplaces once in a month, it's going to be very difficult for you to find deals. You need to figure out how can you increase that deal surface area of yours, right? Whether that's your network, whether that's friends and family, whether that's posting on LinkedIn, on Twitter, whatever it is, right? You need to figure out how can you like get more deals, or how can you find the right thing with, like, how can you increase that surface area without that much effort, because it is very possible. It's just that people don't go outside the box, they don't really like try to understand what type of deal am I looking for, how can I get more deal flow here, how can I learn more here, and yeah, I think also people try to like they make it into this like very big task that they have to overcome, and they take a lot of advice before actually doing anything. And I genuinely think that like a lot of the wannabe searchers, or people going through the process, um, just doing it, like rather than before going to buy trying to first of all going and raising 5-10 million to buy a software business, why don't you buy one for $5,000 or $10,000? If you've never run a software business before, you've only ever worked at companies, I don't know if it doesn't occur to them, or if they think maybe they won't get value from it. Because if it's the second one, I would think that I would say that they're very wrong. So yeah, I think because there are these different buckets, depending on who it is that might be wanting to do this. But I think generally having a bias for action and increasing your deal surface area, and aiming to make mistakes quickly, because at the end of the day, you're going to make mistakes, and that's where you learn the most. So yeah, I'd say those would be like my main pieces of advice.
Can we maybe go more in detail with one of your deals, the Sourcely.ai? Let's take this like a case study when it comes to value creation. And I think if you show to a person that you buy a business for 4K and you sell it for, if I can say, like almost 200K, that's a lot of value creation in a short 6-month period. And if you could do it again and again, I think you would be everyone would be happy to do it twice a year. So what did you do? And could you repeat this process with your other portfolio companies, or you got a bit of, or there was a bit of luck involved?
Oh, so first of all, there's definitely the luck involved. I think any success requires luck, and that's why I truly try to maximize the luck that we can get. And I do think this is a business model that in a way does position us for that, like just with these micro deals. I do think luck is really important, but with Sourcely specifically, so to break down the acquisition a bit, from acquisition to exit was about 15 months. In that time, we grew the business from 500 MRR up to basically 6,000 MRR. It was fluctuating between 5 to 6,000 MRR when we exited the business, and it was extremely profitable. It was running at about like 90% profit margins for throughout its life, and so I initially saw it on Microns.io, and I then saw it on acquire.com again. So it was on market for at least like 6 weeks, or if not 2 months. So this was also this was basically like 18 months ago, or almost 2 years ago, right? So there were much fewer buyers. So I think now marketplaces are a lot more picked over. This business, I think it just, honestly, what probably put off all buyers was that it had a terrible landing page. I've genuinely never seen a worse landing page. Like, it could not be more basic and more I did. It was just really bad. It literally looked like a landing page that you had made on pen and paper. I don't even know. I don't know how they managed, but it was really bad. And it somehow was at 500 MRR, where it had 100 customers that were paying $5 a month, and all of those customers came from one TikTok that had gone viral. So I was kind of if it with this shitty landing page, if it converted 100 people, I'm sure I can do more with this. And then I think that another thing that was a huge advantage to me was at the time I was still in college in the US. So I mean, it's a student AI tool. So I had a lot of direct access to distribution, and I had a unique understanding of the customer market, what their pain points are, how to market to them, stuff like that. So at the time, I felt that we could get like, millions of views, a lot of organic traction, but I wasn't sure. Like obviously we had to actually implement and execute on it. So that was the initial sort of thesis. The business obviously making $500 a month, so $6,000 in annual recurring revenue. It was priced at around like, I want to say like $9,000 was the asking price, so like 1.5 times annual revenue. And at the time, I was so new, I was still like, that's too much for me. I don't want to take that much of a risk, So I negotiated them down to $4,000, which was a bit below 1 times annual revenue, which I felt at the time was a great price, where it just became a no-brainer price for me. So yeah, I initially like I went through like a bit of the process with them. We weren't agreeing on price, so I said, okay, I'll let this go. They came back to me in like 2-3 days or like a week or so, and then we closed the deal. So that's kind of how we started. That's the potential that I saw, and then very quickly we came in, we almost doubled the price instantly. So from $5 to $9. And we like completely revamped the landing page, revamped like the technical side of things and stuff like that. So it worked out really, really well, honestly. A lot better. Like if so for Pocket Fund, I haven't put in any more money since our initial $4,000 acquisition. And since then we've made like 7 acquisitions, and we're doing a bunch of stuff. We have a pretty big team now. And like I could never have expected that outcome from that first acquisition. If I'm sitting here, if I sat here and told you that, like, when I bought it, I would, I knew for sure I would sell it for like 6 figures, I would be lying to you. Because, like, I really had no clue. I genuinely just felt that it had a lot of potential, and I felt like it was in the middle of my summer vacation at that time. I felt that, like, I was confident that I wouldn't lose money, right? And I would be able to sell it for a decent return, even if I wasn't really able to grow the revenue, right? So that was why Pocket Fund was initially like a no-brainer, and it like enabled me to like just take that leap of faith, after like 500 plus initial calls. And during that time, I probably sent in like, I don't know, like 50 plus LOIs. Many of them were rejected. Many of them, some of them reached like due diligence phase, and then they would fall through on like the deal structure, because I've always been like, in a way, I mean, like, I don't mean to be rude to sellers, but in a way aggressive, and in the deal making and in that final part. So with Sourcely, it worked out, and then after that, it's given me a lot more confidence to like, when I see value, to close the deal, and yeah, it's worked out pretty well with all the deals that we found so far.
I talked to quite a few people that you're coming to the podcast, and the biggest question oftentimes were like, how do you manage it all? Like six micro companies. So how does your day-to-day look like? You're trying to find new deals, you're trying to grow the portfolio companies, you're hoping to sell some of them. Like how does it all work for you?
So I think like honestly, my day-to-day changes every month, every couple of months, especially based on the acquisition that we made, So usually like when we make a new acquisition, I will be really involved, right? And I'll be helping the operator, the team, whatever that looks like. But as time goes, generally we try to keep it to 4 to 8 weeks, that transition period. And then I'm more hands off on the business. So a lot of it's more like, I would say, like, I try to manage each acquisition on a weekly or a monthly basis, so I definitely think having the right team members really, really helps. And I'm usually working like 8 to 12 hours a day, if not more than that. I generally really enjoy what we're doing, and I really enjoy who we're working with. So it definitely, it's difficult for me to give you an exact day to day, because honestly it's very different. I'll say more on a week. So I like to organize it more like on a week basis. So I'll have a day where I'm like fully focused on helping on working on this one acquisition, right? Maybe it's a new one, maybe it's an old one. I'll have a day where I'm focused on deal sourcing, where we have client calls, where we have sales calls, stuff like that. So I try to divide the week rather than it days, like the specific days, because I think that like I work better like that. I prefer to like, be able to work on something for 3 hours, 5 hours at a time, rather than 1, 2 hours. So yeah, that's kind of how we manage it right now. And yeah, I think generally like having very strong hiring pipelines, right? Because there's bound to be churn even in the people that work with us, to literally be able to like anytime we need to pull somebody in, right, and have them join as soon as within the next day or within the next week, I definitely think like that's like a really big leverage point that we use on like basically every 2 weeks, if I'm being honest. And also just like if I'm to give you some more perspective, because I do understand the question, like it is I didn't really understand how I would be able to do this until I was kind of doing it. And I do think like genuinely the talent and the labor like available in India is a huge reason for this, because the risk, to have like somebody do things for me, or like bring somebody in, to like take ideas forward, because that way it allows me to be a lot more on the strategic side of things, and bring in people, to execute, and obviously they won't be perfect, but as long as we have short feedback loops for them, we've seen them able to improve or iterate really quickly, right? And then obviously some people can't hack it, so we also have strict criteria, and people realize within a week or so, if like both parties realize whether they're the right fit for the way we work. So yeah, I will say it is quite hectic as well at times. It's not as structured as my answer may have made it seem.
When do you think you're confident enough to say that, okay, this model works? Me buying those extremely small micro companies, growing them, selling them, let's say following this PE model or building like a long-term HoldCo. What do you think? When can you say like 100% that this model works? And then will you have like a temptation to raise outside capital, or you already have like people throwing capital at you because of what you have done already with this short period of time?
Oh, that's actually a really good question. Like that's something that like I ask myself, and like even me and my dad speak about quite a bit. And I think from what I've seen about myself, I almost don't want the perfect model right now. I don't think that's what I'm really searching for yet. And I don't think I will be ready at any point to say, yes, this is a good model. Because for me, it's like that I didn't get into this to raise a fund, or then like do this one thing. I got into this to do this. So for me it's really about the journey, and like constantly iterating and improving and building. So I don't think that I will ever be at that point of perfection. I don't think I really want to. I want to be in a space where I'm constantly feeling like I need to improve, and because that's where I feel like the growth really comes from, and there's always places to improve, but I do think that like just in terms of the economics, in terms of like, will this provide a return? Will this return be better than what I can see the market providing? I think at this stage, just because we're talking about small investment amounts, I do think we're at that stage. What I'm unsure about is the scalability, right? And that I think like only comes from like actually implementing it, So we're currently testing this one deal. I expect us to have like decent results in the next month or so to be able to then go out and do other deals. And I think to answer your question in terms of the fundraising, from my perspective, like that so the way I see it right now, capital and deals are abundant. Like there's I I think it's definitely because I post a lot on social media, right? I tend to get a lot of people who are interested in investing and stuff like that. And generally like people see small amounts like 5-10K and they think like, oh, it'll be easy for me to invest. So I think like that's not really been a problem as such, but I think that like we want to make sure that like if we take capital, it's not gonna be like, I don't think like I really I don't want to say dislike, but I distrust the current fund model. And I think generally like it's way good for fund managers. Like you just take the management fees, and that's what VC funds work on. That's what private equity funds work on. That's what they pay their salaries with. And I just want to build something different. I don't think that's completely like, I don't think that aligns incentives perfectly. And I do see how it is just beneficial for the fund managers. So why would they want to change? Why would that industry want to change? So I don't think I want to like raise as such, but I do think that there's a lot of young people in India that can use opportunities. So if I can create a kind of vehicle or a platform, that where we formalize this, where we find the deal, and then like more like SPVs, where they're investing in specific deals, right? Like, because we'd rather have investors be like, oh, I like this deal. I know my networks can help with this. My operational experience can help with this, and be able to pick investors for specific deals and not have to like, raise a fund and then like all the headaches that come with it. So I think that that's kind of how I think about it right now. And I think the goal is really to like democratize this, is to give people in India access to investors, to deals, because the levels of talent, and just not even levels, just even if you think of it as like let's say India has the standard bell curve, of talent. India currently has the highest 20 something population in the world, and like our software education or the technical education, or just generally like there's a higher percentage that's towards software. That's like a dream, like for a lot of the like that like what Constellation started like 20 years ago, or whenever they decided, okay, let's buy software businesses, and everybody was like, oh, like what a great idea. I'd like to be able to do something similar. That doesn't mean like everybody has to start it, but I would really love for others in India, others in Africa, wherever else in Asia it is possible to do this. Because I really think like the economics make a lot of sense. The returns are possible. The deals are there. A lot of good deals are there. It requires the right operators. So that's what's missing. The deals are there. The capital is there. The operators are what's missing. And I do think countries like India, Africa have these in abundance. So that's what I really like to tap into and grow. Much more than like raising a fund. It's not as straightforward to do something like this, and I'll probably fail multiple times. But yeah, I think that, even if we help some people, I do think that would be like the preferred outcome.
How old are you?
I'm 23. I just turned 23 in like November, like 6 months ago.
You have plenty of time. Um,
Yeah, that's the reason why
when it
I
comes
don't want to raise money at 23, I don't think I know enough. I really don't think I know enough. Like I get for some ideas you have to raise money, for some business models you have to. But I don't think I know enough. I don't think I want to have the obligation of investors, right? Because I think if you're taking somebody's money, like for me, that's a a responsibility that you owe to them, and I'm not sure that I'm ready for that yet, and I think it would make me approach this differently, which then would, I feel, lead to worse results, compared to when I'm doing it without any kind of bias, any kind of anything changing my decisions.
Man, you bought 6 companies, you're in your early 20s, 100% bootstrapped, and you telling that you don't know enough. Tell me about being more humble.
Dude, no, I really don't think I do, because I think um, literally, I was in London last week for the Roll Up Europe event, and I've never learned so much about buying businesses in such a condensed period. So I think there's I really think the world of buying business, it's like a big bad world of buying businesses. There's so much out there. They're not entirely aware of each other either. There's just, let's say what Roll Up Europe is doing, it's so needed. There's very few communities like this. There's very few, just in terms of I generally think buying a business, just, it's an ecosystem. In the US, that ecosystem is extremely evolved. There's probably thousands, if not 10,000 plus private equity firms, search funds, stuff like that. Everybody knows who they're going to sell to. There's a nice little chain, and they're all very happy with it. And the way I see it is that as far as these private markets go, it's very efficient. I think where there's a lot more inefficiencies, where there's a lot more potential, is in Europe and Asia, right? Where the markets are a lot more fragmented, the ecosystem isn't as developed, and it's just generally a much more inefficient market. That's where I feel there's a lot more money to be made. And genuinely, as an ecosystem, I know nothing about how people raise large funds, about how they approach that, about just the way they think about it. And just I just think perspective, is really important, having, first of all, getting that perspective, and then once you have that perspective, it completely changes what your picture looks like, So I do think that, yeah, from those points of view, that there is a lot for me to learn. And just generally in India, the ecosystem is dude, if US has thousands of buyout private equity firms, the entire country of India, 1 billion people, probably has 10 buyout private equity firms. 10 operating in the entire country. It's a bit more than 10, I think. I don't know the exact number, but it's less than 20, less than 30. And these are funds, right? So people that have gone out and raised funds. It's mainly because of the regulatory environment, where it's a bit of a pain to actually raise a fund. So there's a lot more private buyout firms, but the ecosystem is nowhere as evolved as in the US, right? Where, for an HVAC firm, I'm going to buy it for so much multiple, and then there's going to be a buyer that's going to buy it for so much multiple. And that's there for multiple industries in the US. That's there a bit for Europe, but that's mainly based on the US multiples. What I've seen, the ecosystem isn't as evolved, and in India, it's non-existent. So I really think that there's so much that I need to learn to be able to build that ecosystem, here in India, or whatever I want to do, to really be able to build the structures in the right way, build that right ecosystem, and for that, it needs a lot of players as well, you know. So yeah, that's why I feel like I have a lot to learn, because there really is a lot out there to learn from and do. And that's why I feel like, when you ask me when do you think you'll be happy with the model, I really don't think I ever will be, because there's always gonna be especially in India, there's people don't know you can sell a business. It's not a common thing. It's not an option for people. It's just not a common thing. That just, and the concentration of family businesses in India compared to anywhere else in the world, I think is way higher. And yeah, I just think there's a lot of opportunities here. It's an extremely inefficient market. So I don't know how to make it more efficient. I don't know how these guys, I don't know how they developed, like, because 20 years ago is not actually that long ago. If Constellation basically started private equity buying softwares, that's not that long ago. So I don't know how they did it. I don't know how it was built, but that's what I really want to learn more about, and what I just, I don't know who can teach me that, but yeah, one day, hopefully.
There are different steps, different levels in this game as well before becoming like a constellation in India. So what is your goal, and maybe what does this model look like when you have like 20 to 30 micro companies in your portfolio? Do you think you need to like shut down some of those companies, or you see like, okay, it doesn't work, it's not, there's this opportunity cost of, and it's not worth spending time on it because some of those portfolio companies could be like growing extremely fast? What is your take, and what do you see with your current portfolio of 6-7 companies at the moment?
Yeah, no, that's a great question, and it's like it's just something you can't avoid. You do have to like put less effort into the losers and like double down on the winners. So I think where this is different is that, like, in the model that I have in mind, we would be putting in place of a found like an operator who would be the act as the founder of that business, right? Who would be paid like a certain percentage of the revenue and profits and stuff like that. So as long as they're able to continue, and that this is where the beauty of India comes in, right? Wherein, like, even with 1,000 MRR, 2,000 MRR, you can have like a decently experienced operator, like somebody that's worked at a consulting firm for 3 years, worked at Deloitte in India. You can come in and run your business, and that's going to be a fraction of the 1,000 MRR, or the 2,000 MRR. So with that perspective, like, I do think that like the goal wouldn't be to like shut them down, but it would be to have like a good efficient review process, and honestly make, like, if the founder is not doing well, take him out and replace them, right? Because ideally the deal should have the potential, right? Unless the deal doesn't have the potential, right? Or there's some kind of like, maybe like whatever API they're using has 10x its price, or something like that. If something like that unexpected happens, then yes, shut it down. But the model that I have in mind, and that's why I think the beauty of like VCs, they don't even care about 10xers. It needs to 100x for the fund economics to work. I really don't like that. Even like with private equity, like, I don't like that you just like give up on companies because like, oh, it's not doing as well. Unless there's a fundamental problem, it probably still has potential. And I do think with the model that we have in place, the founder would be the one to drive it, and then it's up to us to provide him with the right systems, the right support, the right tools, whatever he may require, because it's going to be possible for just one person to run the business, right? We're going to have to be able to give him more employees, more labor, right? That he would have to pay for from his business, right? But he doesn't need to pay a person's salary, right? So in my mind, and this is something that large companies have, like very large companies, but if they have internal cost of labor, right? And this is something that I would like to implement over time, wherein within this setup, they will have an internal cost of labor, right? Where they can pull in people, they can get whoever they want within a week's notice for whatever they want to, right? And we'll tell them the cost. So I think, like, as long as we have the right systems, to be able to do that, we should have it in such a way where we're not losing any money on any deals. And that, I think, is really important to me, because I don't think the best business model is to aim for 100x and not care about people who are 10xing. I don't know how that's become a like, I guess because 100x is pretty cool, I get how it's become a reality, but I really think that yeah, in my mind, no businesses should lose money. They should all be making money. And that's why also, like I have it in mind that people are investing in individual deals, right? Because then it's no longer like as if it's like, oh, it's just like a pooled equity, investors are individually investing in each of these. So they would ideally also be involved, be some kind of advisors. Yeah, that's kind of the way I have it in mind. But that being said, it's all like we're almost definitely gonna fail. Out of our first 30 acquisitions, probably 1 to 3 will have to be shut down. If like I don't like it's never perfect. There's always and there's only so much that we can focus on. So I do think like when push comes to shove, the best decision is going to be to shut down things that aren't worth our time.
Man, one last thing you said many times, you mentioned so many times, like the talent you have there. So my question is, how do we get this talent to improve companies in Europe, in US, in Asia, and how do I have access to that? Because you definitely do have access to that.
So honestly, I think so. Let's take it from their perspective, right? Let's say you're a CEO or whatever, sitting in the US or UK, and you want to hire global talent, right? Unfortunately, most of these guys do not do most of the hiring themselves. They have other people that are doing it for them. So it's never a question of how do you do it. It's how do you ask somebody else to do it. And I think that is the wrong approach. That's not how you get because the way we like, it's not about getting people to apply, right? You can just like, yes, you can just pay on LinkedIn to like get people to apply and get a lot of people in there. I think it's very, very, very important that your talent is almost in a way like preloaded, with data about your company, about you, and especially about your values. That's what we feel is like what we've seen is that like when because we put out so much content and there's so much to learn about us online. When people come in for interviews or when they apply, they already know exactly what we do. They also not just that, but they've literally watched like hours of videos of me on YouTube or Instagram, and they get like the vibe that we're coming from, the values that we have, right? That we're really focused on. Like, it's not just about metrics and tasks, but it's really about building. It's really about enjoying what you're doing. It's really about having an interest in what you're applying for. Because at the end of the day, like and this is true for like literally like senior people, new interns that join us. I try my best to avoid telling people what to do. I lay everything out for them and I ask them to pick. And they just go through trial and error. And because I genuinely feel the best way to get people to work for you is when it comes out of interest. And unfortunately, the way a lot of the current setup is it's all of the focus is on the monetary goals. And I just think that's and just on task. So it really depends. Like, I think you as a CEO need to first of all understand what role are you looking to hire for. Are you just looking to hire a VA, or are you looking to hire a problem solver? And then how are you looking to motivate them? Are you okay with having a more complex structure, or do you just want to have a basic structure? This is your pay, this is how it works, and do that for every employee. Because if that's how you like with the second approach, it's not about getting the applications, but it's about converting them and retaining them, and also utilizing them in the best way. Because if they don't have the best intake processes, onboarding, if they don't have the right role for this talent, I can give them like a genius, right? But like it could give them like Mark Zuckerberg when he's 19, but they could just be having him like, just like maintain systems and stuff. So I think like that is really important for people to understand is like, who are they looking for? What is the role set up like? And then the next thing I'd say is like just building a personal brand for me has been the most helpful thing. And I really genuinely believe that like it completely changes the hiring dynamic, and I think that's something that's actually something that we're starting to work with some fund managers or like like, individual investors, stuff like that, where we're trying to help them create content, actually build a personal brand. Because if we're, say, helping them with deal flow or stuff like that, we found that like just building a personal brand, working on this, and first of all, like because I'm in this niche, it's a lot easier for us to help them as well. And like none of the agencies really like offer this, like can help with this such specific stuff, So that's what we've seen. Like honestly, like it just like we'd rather get 10 high quality applications where they've literally gone through like 3 hours of videos of you just talking about things that you're passionate about. Like just the way the mindset the candidate comes in with, the understanding that they come in with, the excitement that they come in with, for me is different. And that's what we've seen as like, and like honestly the problem is that like a lot of these guys don't have the time to do this, and like if you don't have the time to put in, and then you need to figure out how can you get the people under you to do it in this way, right? Because like it 99% of the people listening to this, or just in your audience in general, or in general, are hiring through the same pipelines whatsoever. You can't expect to get any new candidates, anything great from that same pipeline, just by doing things the exact same as everybody else, you know. So yeah, I really think like personal brand can be a huge differentiator for hiring. If you want to look specifically within India, hiring in India can be very, very cheap, but you need to reach headhunters here in India. You need to like try to create an Indian LinkedIn account so that you can post job postings from here with the cost over here, because you don't want to be paying the US cost for job postings here. And like, yeah, be aware of the role that you're applying for, and increase the barriers to entry to apply. You'd much rather get quality applications. You want people that are going to go above and beyond, and you want people that are intrinsically driven, or driven by curiosity, well, like what that driving factor for them, for me, is like the most important. And it, like, yes, money is important, but the driving factor should not be money. And unfortunately, most remote jobs, all these guys, they go to like some kind of like agency or whatever that helps them hire remote, and it's just not the right applications, and not the it's generally for the money, right? And then the middleman is also taking like a 30% cut, 40% cut, which like doesn't feel nice for the employees, so they're not really trying to go above and beyond for you, so I think like it's not just about finding the right people, but it's about like giving them that onus, or like that inspiration or whatever it might be, right? That makes them go above and beyond for you. And we like to do that before they even apply, right? Or as they like, we filter that through the application, and that like are they actually going out there watching like hours of my YouTube videos, reading my newsletters, stuff like that. And I tend to be pretty straightforward, and like my personality shows, so I think that also helps. And I don't think like some of these larger CEOs can always be so open, with any appearances, and like any content they put out there. But I do still think, just in terms of values, I think that is, you can make that really clear, and get people according to that.
Okay, Dev, thanks a lot for doing this. You're not holding back. You're sharing all the edges you have. The only thing is that who's going to take action on those learnings and who's not. So I want to wrap up in here. Last one. What is your favorite book?
Ooh, that's a really good question. Honestly, I used to read a lot. I don't read as much anymore, but I recently read oh man, I'm forgetting the exact name, but it's Sahil Bloom's new book. I think it was like 5 types of wealth. Yeah, I think it's like 5 types of wealth. And I really, really enjoyed that. I think in a way, maybe I enjoyed it more because it like it agreed with a lot of the way I think about how I spend my time. And I think, yeah, I think especially for I see how it's like reading that book has a completely different perspective depending on where you're at in your life, right? if I read it before I started college compared to in 5 years or in 10 years, it's like it has different perspectives and different lessons. So yeah, I think that I really liked it. And generally, like almost everything Sahil Bloom has written, especially around his mental models, I love those. Like I genuinely think like his newsletter is like it's helped me a lot, just to simplify decisions, simplified thinking, because I do think like decision fatigue like hits us all, and it's very, especially with something like this, there's a lot of decisions that we have to make, between deals, between clients, between hires, like on a daily basis, so I feel like having these like mental models, these things like decision razors that help me make decisions quickly, like I find really valuable.
Okay. Thanks again for doing this. I hope to do it again in the future. Once you have a portfolio of 30 to 30 more businesses, maybe 20 more, maybe 40 more, I think it will grow quickly. So thanks for today's episode, and talk to you soon, Dev.
Awesome. Thanks a lot for your time, Nick, and everybody listening. I appreciate you giving me your time, and yeah, honestly, I really appreciate you inviting me here, and yeah, I'm excited to show people, the journey in a couple of years. I think what you're doing is really cool, and yeah, I love the podcast. So excited to see other episodes that you put out, and hopefully people got value from this. I do think that like a lot of what I spoke about does take a lot of time to actually implement, which is why I like being open with what I do, because I genuinely think like if others can do it better, I would love for them to do it, because that just shows to me what's possible. But it does take a lot of time. It does take a bit of iterations, and the results compound over time. I think in a way that a lot of what I've spoken about, you need a trust in the process, and over time, like the results, yeah, they speak for themselves.